Take a closer look at the markets for December and into 2025. Joining us now, Lori Calvasina, RBC Capital Markets, head of U.S. equity strategy. Hi, good morning.
Hi, good to see you.
You're in studio. End of 2025, 6,600 on the S&P. We had Tom Lee in yesterday. He thinks we could do 6,300 before the end of this year. So 300 points on 6,300 for next year. That doesn't excite me. You're looking for a year, one of those 5 to 6% years that the market over time delivers occasionally.
Yeah, look, where we priced everything was right before Thanksgiving. So at the time, it was about an 11% return.
Total, the end of this year and then all of next year.
Right. And so, look, and I think, we view these targets as a signaling mechanism. We say they're a compass, not a GPS. I hope Tom is right. I think that everybody would be really excited to see 6,300. But one of the things we did say in our outlook is we do think we have to have a little bit of a breather, maybe a 5 to 10% type drawdown. That's nothing nefarious. We've actually had 2 of those this year, right? And it's still been quite a good year. But our sentiment work has started to get a bit stretched if you're looking at the CFTC data, similar to what we saw back in January 2018. Actually, a little bit worse than that, but back then we were also making a new all-time high on that data. And valuations are a bit full. I think we've enjoyed a catch-up trade outside of the top 10 names, outside of that big mega-cap growth cohort. And even in the rest of the market, or if you're looking at S&P equal-weighted, we're starting to creep up to around 19 times. So there's a little bit more room on valuation, but not a lot. We think it's going to be a good year, bottom line.
You said that before the election, if there was a Republican sweep, that there would be significant tailwinds. What was, and that's obviously what happened, and these tailwinds you think are still in effect. What was your probability at that point for a Republican sweep?
We did not make any, we didn't, do one of those charts.
But you just said if it were to happen, here's what we think.
And I'll tell you, we were actually surprised that we got a united government on either side. We didn't really know which way the White House was going to go, but we felt like we would probably end up with a split Congress, and that's not what happened. So I think that's where there's been some positive uplift for the market and really the potential for positive surprise, because frankly, a lot of hedge funds that I talked to back in September were getting ready for a Trump victory.
Overweight financials and energy. Energy, if we drill, baby, drill, it seems like we could increase supply. You don't necessarily think that's a bad thing.
Look, I think it's a wrinkle. And, we did this survey right before the election of our analysts, and we asked them to rate their industry outlook, the implications under 4 different scenarios. And in the Republican sweep scenario, the 2 that were most constructive were financials and energy. And our analysts did acknowledge that issue, but there was more excitement, I think, about the regulatory aspect, to be honest.
I think that it is like it's a hard one to figure out. But if you remove a lot of the regulations and permitting and all those things, it will increase the supply, but we probably are going to need to increase. The demand is probably going to keep up globally with the supply that we increase, and we'll be selling into that as a country.
And look, I'll tell you from my perspective as a strategist, the oil price isn't the only thing we look at for that sector. So, we look at valuations, which are still really, really cheap.
So it's not just,
Right. And I would also argue, if you think, and this has nothing to do with the election at all, but like the dividend yield in the energy sector is really, really high versus other sectors and versus history. And investors do pay attention to things like that. So I don't think that this is just a pure play on the oil price anymore.
In financials, I certainly understand, because that's,
there's
the
no
Democrats go crazy with regulation on the financials.
Right. And look, if you go back to that survey we did, right, my analysts saw a lot of conflicting cross currents, and it was really, sort of deregulation, M&A, corporate tax cuts, individual, tax cut extensions. Those were all tailwinds. There was some concern about tariffs. I would say financials is the one sector where, you might get some tariff impacts indirectly if there's an economic ripple effect, but there's no direct impact there.
What about communication services? Why are you upgrading that?
So, it's funny. This is one my analysts...
Funny how? Funny ha-ha or funny...
Funny in a data nerd kind of way.
Okay.
And data nerds, we find our humor where we can. But my analysts have been a little bit cooler on this one, which is why I have not been overweight. But I'll tell you, on my data for the last couple quarters, we've been seeing really compelling valuations versus the rest of the market. Earnings revision trends have been sneakily strong. So this has been one of the strongest sectors on the rates of upward revisions. And we're seeing a lot of sectors with kind of modestly downward revisions. And then when I think about, sort of the political aspect, these companies aren't really talking about it at all. which is kind of fine with me. Like, I would like to have something, from a sector perspective that's not too involved in the election. I will go back to my analyst survey again, though. My analysts, and we only have a couple of them in this sector, they had a very modestly constructive tilt under the Republican sweep. And again, it was things like taxes and deregulation. It wasn't like they were pounding the table on these issues, but a few positives and no negatives. And, we're sort of sitting here looking at all these sectors with a lot of wrinkles and valuation problems. And this one's got some good earnings revision trends, cheap valuations, and no real problems. So it seems like kind of a new place for fresh money.